Hello traders, this is Ala Peters, founder of Alpha Wave Trader method based on pure price action for entry and Fibonacci for exits. Method that doesn't involve any indicators whatsoever. Method that applies to any instrument and any time frame. In this webinar I will share with you what Alpha Wave Trader method all about, and the most exciting part of the webinar, always me answering your questions. So please prepare the instrument of your choice, time frame of your choice, and I look forward to answering your questions. So pretty much, for example, it will be Apple monthly or Euro USD 5-minute or Dow 1-hour chart. So if you would simply say Dow Euro, and if you will not highlight which time frame, then I will simply choose that for you. All right? Shall we start? Please spend time reviewing US government required disclaimers, as it is extremely important to recognize the risks involved in trading, as trading is one of the most serious businesses of all, where knowledge remains the key. So what makes Alpha Wave Trader so different? Alpha Wave Trader uses no software, no indicators of any kind. When you come to my trading room, this is all you will ever see. This is all we need to identify trend inception, trend reversal, profit-taking levels. I appreciate the fact that men prefer dark background, but it is all that we need to identify the most important levels for profit taken, for reversals, and it doesn't matter if it's range charts, tick charts, 1-hour, monthly, daily, weekly. So therefore, here's an example. All of the levels on oil here identified based on pure price action. This is what price spelled out to me extremely clearly last week as of May 22nd, where the end of the minor trend will be. This is the only place where we acquired only long position. This is the most important level in the market structure, because we always have minor trend, we not always have major trend. The most important level, just for the humor point, magenta color, is not to be ignored, is to be respected dearly, and price struggled at this level for quite some time, giving very powerful long opportunity once, twice, 3 times, and only if rules are met. And this is exactly what we're discussing in the room this morning, as oil was completely comatose, and I will show you in just a second why. Because of the daily levels. And I spelled out, too bad, so sad. If you don't know the rules, I expect very powerful reversal after trading room hours around 102 area. Where did the buyers pick up this steam? A couple ticks above 102, as expected. And this is very impressive bullish formation, and I expect rally to pick up this steam overnight. But the key level remains to the upside in order for oil to break through 102.60. This is the fight that's been happening on oil entire day today. So this is all we do in a trading room, and this is all our students and graduates do. Doesn't matter if it's ETFs, stocks, options, monthly, daily, weekly. If instrument has a price, we only trade using markets, using price structure, based on very simple and well-defined rules, and exiting using Fibonacci levels. So how in the world did I come with a conclusion that this is all that matters? Pure price for entry and Fibonacci for exits. It is because every single indicator in the market is delayed. Every single indicator that exists shows you what price did after the fact. because indicator has to be based on something. Even volume indicator based on after the fact buyers came to the market. Fibonacci levels tell you that very, very far in advance, where buyers will be exhausted, where sellers will pick up the steam, and that's all there is. Price spells it out at that trend inception. So let's take a look what played out on S&P today, as it was very fascinating and wild ride. This is what played out on S&P when S&P came to the end of the minor trend, all the levels identified since early May. Price came to this level, the most important level in the market structure, and staged very powerful collapse, reminding you the most important level will always and forever remain decision point 1. The end of the minor trend is the level you never ever want to enter into. This is a level where you have to monitor for trend reversals. And if you buy well outside of this level. And if you buy next, you buy outside of decision point 1. And this is what price had done for the first time when it came to reversal zone. Price staged bearish pullback, once again finding buyers where? At the end of the minor trend. How marvelous this puzzle is. And what did you witness today? We had taken short on S&P for 3 points. Bearish trend was very powerful. And this is where buyers stepped in. And this is where the fight goes on, because it's reversal 3. And that's how puzzle keeps continue dancing between these levels. This is how Fibonacci based support and resistance is formed. There is not a support and resistance in this market that's random. It is precise, it is clear, it is defined, and you know all these levels far in advance. Unlike all the indicators that show you all these levels after the fact, they will never ever show you how the price will behave in the future. My favorite indicator of all times, as I use them all, were moving averages, crossovers. Moving average crossover is probably the indicator that I respect the most, because it works 20% of the time, which is drastically higher percentage that the rest of the indicators do work. Why is that? Because MACD is fabulous in trending markets. That is not the case when market is in consolidation, which is exactly what oil had been doing, torturing everybody today for 3 hours. If you are using moving average and market is in correction, it's not a happy trading. Let's take a look what's been happening on oil at this level. This is why oil created such an ultimate chop. Oil found reversal level, all the levels drawn since March on daily, and staged very powerful collapse, doing the flappa chappuccino, 3 hours of complete coma. If there are any of oil traders here, this was oil today, right here, staging worthless corrective fluff. None of our students had been trading oil today because it was very clear that it's worthless correction. And using indicator in this market conditions can be extremely dangerous. The smartest thing? Walk away from computer and let the trend finish its marvelous dance. And that's exactly what played out when daily came to decision point 2. So here's an example of one of the charts. One of the students who'd been trading for 20 years who came to private mentoring. And when I do private mentoring, I like get into traders' computers, and I said, let me see what you've been doing for the last 20 years. Because he said, I've been sort of break-even trader, but I love trading, and this is what I've been using. How can anyone learn anything about the markets when price is completely cluttered? There are more indicators here than I can even count. I believe 16. It's extremely conflicting. It's extremely confusing. I don't know why in the world would anybody need to look at these flashing things that just look beyond overwhelming. So this is the very first thing we ask if you sign up for education course. Remove every single indicator from the chart if you believe that price in Fibonacci is all that matters. So there we go. This is all there is. This is all we trade. This is what I demonstrate the method in the trading room on this range charts. We only trade Fibonacci numbers, and this is all we need to identify very powerful trend inceptions and very powerful trend reversal levels. That's it. So what is Fibonacci? Fibonacci is very, very powerful concept that's found in everything. Fibonacci found in nature, in flowers. Why flowers have such an incredible symmetry? Why is every single animal so perfectly symmetrical? Why when you look in the mirror, the eyes and body parts are not in random places? It's because of Fibonacci levels. And the same magnificent symmetry found in price. And I guarantee you that the same magnificent symmetry found in human psychology, on which emphasis we put immensely in the education course. It is all the same formula. And this is how Fibonacci calculated. Very, very simple and very, very powerful. The first two numbers in Fibonacci sequence are 0 and 1. And each subsequent number is the sum of the previous two. And that's all there is. If you identify the very critical 4 rules, you would know extremely well where to take profits off the table. 4 key rules. You would know that if trend is at the end, it's not a good idea to buy. It is very good idea to respect the trend and walk away from computer. So here's an example on oil monthly. All the levels drawn since 2010. Pay attention to what happened on the uptrend on oil. Pay attention to where sellers picked up the steam. This is why the rule number 1 in the course: do not ever get tempted to acquire position at reversal zone. And what has happened with the price when it came to the end of the minor trend? Buyers stepped in with vengeance and picked up this steam to only find sellers where? Reversal zone again. Ouch, how predictable. And you would know that 10 months in advance. You would know what not to enter into and where to monitor for reversals. And what has happened once again when price collapsed? Most critical support found buyers once again. How predictable can it be? Respect the levels and do not ever acquire a position into decision point 1 especially, because minor trend is always present, but major trend is not. That's all there is. Pure price for entry and Fibonacci for exits. If you choose to trade options, choice is yours. If you're a day trader, it means you have ability to make instant decisions. Psychological comfort is essential, but golden ratio remains the same. And here's a nutshell basic principle of alpha wave trader method. That's all there is. Learn to respect the inception of the trend. Enjoy the powerful rally. Stay out of corrective structure. Wave 2. Enjoy the ride of wave 3. This is always present. Minor trend. Wave 3. Don't enter into it. Bad idea. Stay out of counter trend structure. Wave 4. So when I'm stuck in the room on corrective waves 2 and 4, I spell out, it's an aggressive trade. Our students know better. They walk away from computer. Very, very important. Know when to walk away, when not to babysit the corrections, and when to acquire a position. And that's the basic principle of alpha wave trader method. Those are the most important rules. And the very last rule, do not ever get tempted to buy at the end of wave 3. Such a bad idea. You're buying at the end of the trend. And when you'll get in trouble, that's exactly the reason why. Because position had been taken at the end of the trend. When in fact, knowledgeable trader trades only inception of the trend and continuation of the trend. Never the end of the trend. And here's an example. Respect the price structure. Do not trend counter trend. Monitor for reversals at reversal zone. That's it. Simple and pure. Price is not complicated if you only remove all the indicators from your charts. So here's an example of ranging markets. Ranging markets still respect very important Fibonacci resistance levels to the tick, world-renowned 2618 level. Simply respect the price structure and you know this level far in advance. You know where to take profits off the table. Trending markets, if you trade, especially instruments like DEX. Kathy is one of our graduates that you can listen on the website for audio testimony. Kathy was just visiting me from Boston. You really want to take advantage of the trend formations if you trade the very powerful and very volatile low liquidity instruments. Very, very important. The only exception, oil in the last 6 months, ATR dropped by about 60%. Oil had been slowest in years. Volatility on S&P is drastically higher than oil. And if you respect the instrument, you respect exactly what price is telling you. That's simple. So here's the most critical wave in the price structure, wave 3. Exact same formula. Stay out of 2 and 4, enjoy the ride. Wave 3 is here. Same formula to the downside. And here's a couple of examples, and I look forward to answering your questions. Because there is nothing more exciting, very few things in life, than analyzing the price and seeing how magnificent this puzzle is. This afternoon I was working on a brand new strategy and I'm getting blown away. More time I spend with price, more I recognize there is so much more there is to learn, there is to see. This puzzle is absolutely phenomenal. And when I see that from our students who are passionate about price and who see how powerful and basic price is, it makes it extremely exciting to work. So here's Euro. Enjoy the ride. Wave 3. Bad idea to acquire a position at the end of wave 3. Fascinating structure on oil. Respect the choppiness and flop on oil, as oil is a low liquidity instrument and has ability to form drastically more fascinating formations than S&P. S&P is extremely liquid. S&P is the queen of the indices. Oil typically has 20 to 40 times less volume, therefore capable to create drastically more cumbersome formations. Therefore, we're instructing our beginner students who never been profitable before, again, it doesn't matter if trader been in the markets 20 years, do not start with oil. If you haven't been able to double your account, please start with S&P. This is one of the cleanest and most beautiful classic formations you will ever see in price structure. This is what we teach in the course. Once you learn to play with the most classic and basic formations, you can trade anything. And this is as clean, as powerful as it gets. Beautiful buy point on S&P at the 519 area. Nowhere to take profits off the table, walk away on the corrective 2. Enjoy the rally on wave 3. Here the trader got lucky because he got to be able to get a little bit out of wave 5. But this is a reminder how powerful the levels are and how important it is not to enter at the end of the trend. Simply monitor for trend reversals. So this is all we teach in the course. Course is very comprehensive. Pure price, 4 rules: entry, stop, and target ratios. Fibonacci is rule number 3. Know how to apply Fibonacci properly. In group education, we teach everything on S&P and oil, but currently we have forex traders, option traders, stock traders, because formula remains the same. In private mentoring course, we work with your instrument on your computer in addition to all the group classes. And that's all there is to pure price. Pure price is what defines wave and trend formations. This is what defines wave and trend terminations, forming Fibonacci price waves, therefore giving you high probability entries, high probability targets, and show you areas of inherent danger. When you come visit trading room tomorrow, this will be live trading room. Education room is entirely separate. It is open for theory courses and classes with precise instructions. Once you finish the course, you join Alpha Wave Traders Club. Multiple students learn everything within 1 to 2 weeks. 5 weeks is definitely an overkill. So that's all there is. This is Alpha Wave Trader method, pure price for entry and Fibonacci for exits. I'm posting the invitation to the trading room, traders. It's in front of you of the screen. Tomorrow morning, simply click on this invite and you will get an access to live trading room. So there we go. Pure price for entry and Fibonacci for exits. Look forward answering your questions. And that's all you need. Pure price to identify where all of these levels will be. And let me show you why the buyers stepped in on gold if you had opportunity to short gold from this level. Because short trend came to a very important level. The most important level of all, where gold is dancing for the last few hours. Reminding you, know where to take profits off the table, know what not to enter into. Gold is struggling immensely to blast through this level. Let me show you other levels on gold, since we have very few questions about futures. Surprised to see, are most of you guys stock traders? Here's an example. This is what we use in the course as the most important levels in the market structure. This was a beautiful buying opportunity on gold hourly. And this is where price struggled finding buyers once again at this level. And here's a struggle to the upside. What do you see has happened with a bullish trend? It didn't make it very far. It tried, but it didn't succeed. Once and twice. And currently it's absolutely corrective fluff. But you could see where gold is finding buyers. Very close to reversal zone. That's simple. So next question was ZN, 5 minutes, I believe. Just wanted to tell you guys, if you come to my blog, you can see some of the latest trades, summaries, videos, updates. I try to post them as much as I can. ZN, the question is 5 minutes. Let's go on ZN. Since I pulled up ZN 60 minutes, you had very powerful opportunity to short ZN on hourly. This was beautiful. Again, this is picture perfect reminder how important it is to know what not to enter into and to monitor for reversals. Based on my method that I developed based on price structure. And those are the rules we teach in education course. Price tells me after 4 rules obeyed how levels have to be applied. And here's where the N hourly is currently. And this is where you should expect a pullback to the downside. Buyers are picking up this steam, but this is remaining very important level. And as you're witnessing, the very critical end of minor trend is not to be ignored. Every single decision made far in advance on the end since May 28th. So let's go on the end 5-minute chart. One of the most dangerous things in trading is speculative abstract trading. Everything in Alpha Wave Trader method is precise, simple, and clear. So the end 5 minutes. What do I see exciting on the end 5 minutes? 5 minutes is definitely not my cup of tea. KFC trades 5 minutes on DEX. To be honest, I'm looking at my 5 minutes and I'm just getting literally blurry. There's just way too much noise for me. So this is where you had an opportunity to monitor for powerful trend reversal half an hour after market open. So again, when price comes to reversal zone, what you do is you monitor the formations. This is where traders' knowledge will be tested. Very important to separate corrections from reversal. Big difference. Very big difference. Rules must be obeyed before you ever acquire a position. So that was the place that powerful short was setting up on the end this morning. But I also like long pre-market. All of the time in front of you is PST. I'm on Pacific Standard Time. If there is no other questions on futures, or you are asking also daily, let's go on daily. And I'm going to be honest with you, my favorite time chart of all times is monthly. Sarah, thinking of you. So here we are. ZN daily. Beautiful, spectacular rally taking a bit of a pause. Let's take a look and let's identify why. Shall we? Very beautiful rally that's set up since May. Came guess where? To the most important level in the market structure. The end of the minor trend. the level that you must obey and respect forever. And you knew this since early April. And price just reached this level a couple of days ago. That's it. Nothing less, nothing more. Pure price and Fibonacci. That's all that matters. And each and every day it becomes more and more easier to see. So the latest strategy I work on, I'm just stunned. Years ago I thought I knew and understood everything. And now I recognize, my God, price is even more simple than I ever thought. Right now I'm looking on the end daily and I'm seeing 5 opportunities on daily charts since early this year. 5 on daily chart position trades. So let's migrate to questions. Next question was Apple Weekly. Beautiful. Marvelous question. Apple Weekly is coming up. Weekly. Second favorite chart to monthly. Marvelous. Wanted to highlight to you something because it hits a little bit close to home. Because my friend was holding a lot of Apple. And this is a collapse that happened right before Thanksgiving. Those of you who are holding Apple would know that. So this is what played out on Apple right before Thanksgiving in 2012. Pay attention to where Apple bullish trend had taken a major pause and collapsed from. Completely. 3 weeks. Picked up this steam and here's ultimate reversal. And those who could not understand why in the world Apple was collapsing is because reversal zone is not paid attention to. And this was excruciating, that if only investors knew these levels, how much more profitable they would be. How essential it is to respect these levels, and how much price does not care about these levels, as you're witnessing this especially on Wednesdays when we're constantly getting bearish news on oil and we're going long and vice versa. So that was very, very important event. Unfortunately, my friend lost a lot of money because she believed in the company fundamentals. So let's take a look on where Apple is currently, shall we? Apple Weekly. Apple Weekly currently resting quite nicely. Not far off from reversal zone. It is only a correction. It is not bearish reversal yet. But this is not the place you want to buy Apple. Apple could be doing this worthless dance on weekly for quite some time. Bullish trend is tired. The beautiful thing would be if Apple would stage a powerful pullback and to give you a buying opportunity at this level. Acquiring position close to reversal zone is not prudent. It is way too late. Make sense? This is bullish trend exhaustion level. Price will do 2 things. First, correction and then reversal. Currently Apple in correction. There is no bearish trades here. There is tightening of your trail if you were long on weekly to 613.75. Question was on Gold Monthly and Yahoo. Let's go on Gold Monthly. I believe I already answered that, correct? Let's go back to Gold Monthly. My pleasure, Reg. I think I looked on gold weekly, but this is where gold monthly is currently. So again, the downtrend is taking a bit of a pause. The shorts are in charge. We're seeing that buyers were not able to break through the end of the minor trend. 1200 is very important level on Apple, but based on the current structure, it could continue respecting 1200 level, but sellers are still in charge completely. So it's a fluff, very late point of entry. Right now I wouldn't be touching anything on gold monthly. Sellers still in charge, 1200 remains key level. So I would be monitoring gold at 1200. What will it do at that level? That would be key point. Next question was Yahoo and a couple of forex trades. Euro USD EJ. Is this 1 minute or is this monthly? I'm going to Yahoo daily. Euro USD daily. It's the end of the trend, Tom. There is not more than 5 ways based on my method. That's the issue. You're done. You don't never want to acquire position on wave 5. It's that simple. You buy 1, you buy 3, you stay out if it's on wave 5 because trend is ending. Yahoo daily. Let's recap. Very beautiful and very fabulous formations on Yahoo daily. This is where collapse played out on Yahoo daily, giving multiple shorting opportunities based on my latest strategy. Marvelous, spectacular, pain-free trading. Very, very powerful collapse. Pay attention to what happened to the downside. Price struggled and found bounce at this level, finally breaking through the end of the minor trend. But again, it's essential to respect this level. Respect it highly. What do you see has happened with the uptrend? How magnificent is the puzzle? All the levels on Yahoo daily drawn, I will tell you the exact date if you know the method. Since last week in January. And that's where Yahoo collapsed from just right now, again. And that's the power of price and Fibonacci. Nothing less, nothing more. Next question, Euro daily. And please guys confirm that you saw the invitation to the trading room. Posted earlier, and I support will send you another link tomorrow morning. Time, it matters what time frame, I'm not sure. Do I analyze time? I can't tell you when price will reach my levels. No, I do not do Fibonacci time. I wish I did, but I don't. I can tell you the levels, but I don't know. I can't predict on what day and what hour price will make it to that level. So, we teach our students when not to trade. There are very important times in the market when you need to stay out. Alright, going to Euro daily. Any other questions? Please do ask. I actually was analyzing Euro for somebody earlier. Hold on. Much larger time frames. Already, here's Euro daily just to show you. I'm sorry, Euro monthly. That's what I was looking at for my new strategy. So, what are you witnessing? Reversal reached. Perfect collapse. Marvelous. Makes me want to cry. Option traders, those of you who know my number, I'm dying to talk to you. because my latest strategy is to dive for on options. All I've been doing is monthly charts. I have not walked away from the screen today because all I've been doing is developing latest monthly strategy. This makes me wanna cry. How marvelous is this? Collapse, know your levels, decision point 2 to the upside, revisited reversal zone, ultimate collapse with respect of the end of the minor trend. What are you witnessing to the upside? Euro is struggling. How many months in a row? Since 2013 to break through this level. Simple. Euro monthly going into Euro daily. I'm like literally asking myself, years ago I thought I knew everything about price. And when I started working with Danny is a course educator, my previously private mentoring student. Danny is the most patient and the kindest and most detailed human being you can have for a teacher. As a matter of fact, if you ever would like to get in touch with him, send me an email. We have an open forum with our students. And here it is. So, going into Euro daily. So we're working currently on this monthly strategy that's just unbelievable. Already Euro daily, marvelous and powerful collapse. But guess why? Euro daily is taking a bit of a pause because it is reached. Guess what level? That's exactly why Euro is so confused. The most important level in the market had been present and had been respected. Euro is struggling immensely, reminding you know what not to short into. If Euro will break through this level, next level 34.94 all the way to 33.25. Based on alpha wave trader rules, if you are short, you're adjusting your trail very, very closely and you're monitoring for bullish entries. If you're trading 5-minute or hourly chart, you had multiple long opportunities because this is the most critical support level in the market structure. Make sense? One more question, Netflix. I see the question, Netflix weekly. Give me a moment to pull up. Love, 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 Netflix. I just watched Bible series on Netflix. It's amazing. Highly encourage you to watch it. I have way too simple of a brain to understand and read and comprehend everything in Bible. That made it very simple and very powerful. So here it is, bringing up Netflix daily. Let me know if you have any other questions, please. We'll go over a couple of other things. Netflix, looking for Netflix. Hello, hello. NFLX. So after this webinar, I will continue working on my strategy because I'm absolutely fascinated. How come I was so blind and now I can see something that's so outrageously simple? It typically is the case. The most beautiful things in life we just choose not to see. Magic happens if you open your eyes and respect the price. Alrighty, so bullish trend is way overextended. That's not the place you want to buy. Netflix. So here's the structure on Netflix. This is where bullish trend had found sellers multiple times, reminding you the end of the minor trend is the most important level in the market structure. This is where ultimate collapse had played out. The fact that price is not far off to reversal zone, you barely have any wiggle room to buy. You're buying at the end of wave 5. This is what we teach you. You buy here, here, here. You do not buy here. Anything can happen. Potentially at the end of this week, expect huge selling pressure on Netflix. But no, not to trade unless rules are met. because markets could be stuck in correction for quite a while. But that's the price. And if you know what price is telling you, you would have known all of these levels since mid 2013. And you would know where to take profits off the table. And that's what matters. The most important and the most essential component of successful trading. Where to take profits off the table. And forever and ever, the most important ingredient in trading will remain you as a trader. We all have exact same struggles. We all were born with exact same instincts. Key in trading remains to be selective and conservative, and you'll be amazed how much more successful you become if you only respect the rules and take fewer trades. So I'll just guide you through the website where you can find all the information you need. Again, if you go to the blog, it has all the latest links and posts and videos. Today I had been swamped. I haven't posted anything. The latest blog post on Thursday, as I don't believe in trading on Fridays. If you listen to the graduates, it's actually quite fascinating. We constantly update with our testimonies with graduates. So this is our latest forex trader, Martin. Jose is a trader in South America, a professional trader. Cassie is a DEX trader, wild woman who just visited me. Very, very courageous and very powerful and very strong woman. It requires incredible strength and discipline to trade DEX. Janice is beginner trader. She's never taken any other course. Janice already doubled her account and shares it in her testimony and her emails with other students. So let me know if you have any other questions. I look forward to seeing you in the trading room tomorrow. Do understand that everything I do for demonstration purposes only. Knowledge is power. Being a follower in day trading does not work. In position trading, you have plenty of time. In day trading, execution and knowledge is the key. As late point of entry, it's in front of you, Raj, on your screen. Is everybody else seeing that link? Please let me know. Everybody else is seeing the link, correct? So thank you guys so much. If you don't have any questions, please use that link, and support will also send you another invitation early tomorrow morning. So this is all, if you don't have any questions. Fabulous. Thank you, Raj. Thank you, traders. If you have any questions, always feel free to email or call me. Look forward to hearing from you. Thank you so much. Thank you, Dan. Have a beautiful afternoon. Bye-bye.